Morning, guys. Here's my read on the stock market. We'll get right into the charts. The bulls are going to hate me on this one, I guarantee it. But at the same time, I got to show you guys at least what I'm seeing from my perspective. And, take that into your own trading. Take that into your own interpretation. If you're bullish, why are you bullish? Again, this is a technical channel. We look at the technicals. So what technicals do you see? And then I'm going to show you what I see. So let's get right into it. All right, so far on the bearish call, I've been wrong. All right, that's fine. I can admit that. Does not mean that my bearish call is a longer term call. It's not a day-to-day call. I can't say that we're gonna roll over. I can show you the areas where I think it'll roll over, and usually, I have technical reasons, and so far, like right here, I said it was gonna roll over right here. And we did get the rollover. We just didn't get any major follow through. So my longer term bearish call has not played out yet in terms of this being a bear market rally. But I was able to spot this rollover right here, which was a 5% sell down. The thing is, though, given that I see this as a bear market rally, I'm looking for more. So when I get the rollover here, I'm looking for continuation. So now I want to show you guys what I see today and just point this out. It may or may not mean anything, but I think it's important to at least notice. All right, so we're looking here at the Q's daily chart, and here's what I want to point out. All right, everyone pay attention to the gap right here. I think everyone who's looking at charts notices this gap. The gap has now been filled. So we've filled the gap. We're moving higher above the gap. This is the area where you would expect a possible turnaround. Doesn't mean it's going to happen. We could continue going higher. But this is definitely an area where all the bears are really questioning their positions. I know because I'm a bear and I'm questioning mine. So this is where the bears who see these charts and really know the levels, know they're starting to think that they've made the wrong decision. And that's an area that you potentially get a reversal. It's kind of like when you're selling down through support, and if you're bullish and you break support, a lot of the time that's exactly where you want to buy. Like I said, there's liquidity in levels that run stops. So today they are definitely running stops, and I know that because of the breakdown yesterday. You had this breakdown, which ended up being a false breakdown. It ended up, it was at the end of the day. Luckily, I was able to capture a TVIX trade on that. But, you had this false breakdown and then gaps higher and starts to move higher. So there's liquidity here with stops being run. So this is the area where institutions potentially are able to start to add to positions or build positions within this liquidity area if they want to. This would be a good area for them to do. Okay, so that's one thing. So just keep that in mind. You had the false breakdown, then you pop up. All right, it's running stops for sure. So that's something to take note of. The next thing I want you to look at is the daily chart. All right, a couple things here that I see that are interesting to me that I think set us up for a reversal either today or maybe a gap down. I don't know. But all right, so on the daily chart, here's this trend line right here sitting at 227.50. I've marked that out I've had that marked out. We've had several days that we've held below that resistance. You can see 1, 2, and then obviously these, and then 3. And then yesterday, we still closed below resistance. So we had the pop-up, the rundown, and fake out closed below resistance. Today, they gap it above the resistance and run it higher. So that's a breakout. That's what I want you to notice is we've got, several candles where we just could not break above this 227.50. So we have a breakout above that today. And yet, look at the volume. This is things that you have to notice. You don't want to just look at price action and get emotional and be so happy about how much money you're making because that can change so quickly. You want to understand when you want to understand when the technical picture says, okay, you're still safe, everything looks good, or this is interesting, this isn't potentially how things should be behaving when you have a breakout. So this is a breakout today as of right now. And as of right now, now it's 9 in the morning Pacific time, but there's no volume on this breakout. This is what I would point out before. This is what I was pointing out when we had this previous breakout in this area and there was no volume and, you know, we ended up selling off. So that's just something to notice, that when you have a breakout, it's like when we broke out on Qs right here up into the gap on this day. We had really low volume and that was followed by, you know, a 5% pullback. So one of these pullbacks is not going to be a 5% pullback. You know, there will be a pullback that's a much larger pullback. So you want to make sure that when you see breakouts, there should be volume here. That's all I'm saying. That is something that just doesn't quite make sense. So I don't know whether that leads to a reversal candle or a big sell-off, but I think the potential is definitely there. Notice the RSI down here. RSI's, you know, pushing up against overbought. Doesn't mean this is not that overbought for the triple Qs. Triple Qs can get up in the 76. I think that up around here 80, around 80 is kind of the max overbought range for the triple Qs. So you know, this has a ways to go. Could go higher. Okay, so I've just pointed out a few things that just don't quite add up for a breakout day. All right, so keep that in mind when you're watching the price action. And I'm definitely looking for a reversal. I'm watching for it and anticipating it. Moving over to SPY. So same thing. I've got this little trend line right here on the hourly chart. If we go to, let's look at the daily. All right, so the daily, again, same deal. Breakout today. Here's your resistance, 294.78 basically on the daily chart. And you've got a breakout above that as of right now. Anemic volume. I mean, just nobody is buying this breakout is basically what this says. So if you're just looking at price action, to me, this is a tell. This is a tell that this is running stops. This is a fake out. And I understand the argument. I keep reiterating this. People don't get it. I understand the argument that stocks can move higher on low volume. I know that. And I'm not saying that stocks can't move higher on low volume. Stocks can move higher over low volume. They've done so for the last decade, basically. Okay, so let's just, be on the same page with that. What I'm saying is low volume on breakout days, when you break above levels that have been contested for up 2 months, all right? You've got this range here. I mean, that's been contested for about 2 months, and we break above it, and nobody sees that breakout as a bullish event. That's what I'm saying. All right? I'm saying low volume on breakout days are suspect and indicate to me that they will be faded. Okay, so now that I've got that out of the way, this is the level to watch right now, 294.55. Honestly, if we ran all the way up to this 302, let me zoom out here. This is the daily chart of the SPY. If we ran up to this 302, that's kind of your next level of resistance. If we ran all the way up there on really low volume, to me that's just a screaming area to establish a short. I think that's just a gray area I've entered the trade a little bit earlier than that, but if it does that to me seems like an area where very, very good risk reward ratio to short right there. So doesn't mean it'll work out. I can't promise that. Can't promise anything. But I'm just saying that's a possible trade and a good low risk area to establish a short. All right, let's look at XLV chopping sideways. This thing's just like, Grindville basically, but chopping sideways still. XLF. Let's see here. XLF kind of, just chopping, basically in this sideways range right here. I've kind of marked out a couple levels, but for the most part, it's just a no touch for me right here. Walmart. Let's look at Walmart. So we had that bearish engulfing and outside day. It was both. Outside day is even more bearish than a bearish engulfing. And that's what we had yesterday was this outside day candle. We're not really getting the follow through yet. on Walmart. So we'll look to see how this day closes. Maybe selling picks up into the close and we get that confirmation candle. That would be a bearish event, because in that scenario you would give a confirming bearish candle to this outside day candle here, and also the trend line right here on the daily goes all the way back to 2015 and it creates this bearish rising wedge, and you would recapture that bearish rising wedge, which falls right here. You can see we've kind of chopped through it recently, so that just shows volatility starting to pick up. But that's something to watch for on Walmart. Draw that wedge out. Right now it sits on the daily, sits at 124.75 basically. So a nice solid close below that level would be a pretty bearish event. So something to watch for. Okay, kind of on the same lines as Walmart is Home Depot, and I said this one yesterday. I pointed this out. So here's the chart that I put, the hourly chart. Here's the rising trend line. Nice clean trend line. And what I said yesterday is, notice at the bottom of this area we had some volatility where the stock was moving up and down pretty rapidly. When you get volatility increasing like that, oftentimes that indicates a trend change. So we saw that there, and then we gapped up, started to run higher, and then we started to establish this trend line. So then if you retrospectively look back, you can see that we were chopping through that trend line. And then as you can see, we just hold that trend line through the entire rally, and then again now we're starting to chop through it and see the volatility pick up. So just something to take notice of. And then yesterday I pointed out we broke the trend line. We did a little back test here, and then look, nice impulsive selling candle right there, which was today. And then here's the rally, which is a week, and then selling's continuing. So looks bearish there. Some levels I've got marked out. Let's see what I got going on here. This one, I was looking at that one. I just am not really sure that. So I'm probably just going to go with these 234.60, which is basically where we're kind of holding today so far. If we break that, I see us going down to, it could be right about here. Somewhere right in here. This chart's not the cleanest. I've got, maybe right there. Benefit of the doubt trend line right there, 227.86, 228, somewhere right in there. So we'll watch that, see if that's an actual trade. But if that hits, then what do we do? Well, if we do what the rest of the stock market's been doing, we'll probably come down, hit this, and then just start establishing this sideways grind zone. But again, this sideways trading in the market's going to end sometime. And so this might start to roll over, which is interesting because, in general, Home Depot is a pretty strong company. They have strong earnings and everything. But again, it's all about what the price is. Is this going to price in future lower earnings for Home Depot? So it's not really fundamentally based. It's technically based, what I'm saying here. Here's Tesla. I know a lot of people are interested in Tesla. It's a momentum name, so can be a pretty profitable trader if you can catch it right, but also can be a choppy trader. So the way I prefer to trade this is just me. I prefer to trade it with a smaller position size. And it can move big, so you don't need as large of a size for that. But here's what I see going on Tesla. This trend line right here on the hourly chart goes all the way back to the lows, and we had a reaction, and then you can see we broke the trend line right here. This is basically a kickback rally, although we didn't quite get all the way up there. But the thing is that I'm not sure we're going to get back up there to do a full kickback rally on this trend line, because we've got the major resistance coming all the way from the highs here, back here in February. And you've got a reaction high, reaction here, then zooming in, reaction here, reaction here. So we've got major resistance there. So yeah, if we break that resistance and it holds, then I could easily see a full kickback rally all the way up to that trend line, and that's where it would potentially reject all the way up there. But if we can't break this and we just chop here and maybe start to sell off, then that might be all she wrote. We might start to roll down. And ultimately, I see gap fill. That's an easy zone to target, 650. Could be a lot lower, but I think gap fill is the highest probability trade, so that's what I'm going to be targeting. All right, let's check out a couple high flyers. So this is kind of the first time. I don't typically like to trade these high flyers. They're just momentum names, and I'm more of a contrarian trader, so I look for pivot points, reversal points, things like that. But let's go ahead and look at what we got going on here. I know a lot of people are interested in this stuff. Zoom. All right, so here's how I do it. We look at the monthly. This thing's just rocket ship, a rocket ship higher. Look at the weekly. Yeah, everything looks good on the weekly. So let's look at the major trend right here on the weekly. It's, something like that. So definitely in an uptrend. Let's look at the daily. Okay. Yep, you got a couple reactions there. Maybe something like tighten it up a little bit. Something like about there. Okay, so there's your daily trend. Does look like we're starting to put in a bearish rising wedge here, though. You can see on the daily reaction here. This was a reaction, and look, we closed below, so that just verifies that trend line that it couldn't break out above that held. And then another reaction here. So we're up near resistance. And again, what you can do on these bearish rising wedges is you can short at resistance, or you can wait for the complete breakdown of the wedge. It's really up to you. And it just depends on what, a lot of the times, sometimes what you'll see is they'll break these bearish rising wedges, they'll break to the upside as the fake out move, and then they'll fade that and it'll roll down and crash all the way down through the bottom of the wedge and start to make a move down. So you got to watch for that. But an objective area to short is right up around this 177. And if that holds, then you've got a pretty good entry for a bearish move down. So something to look at there. 1 hour, you can see reactions right around there. So that might be something to look at shorting there. And this might sell off with like a reopening of the economy. They reopen, people start going back to work, and then Zoom is going to take a hit. This Zoom was basically just a momentum stock based on people staying home from work. So there might be a big sell-off coming in this thing fundamentally. But technically, this is what I see in that one. Okay, what else is a high flyer? That Moderna one, MNRA, is that it? Moderna. Sorry, I don't know the symbol. Okay, this is a pump stock, basically, from what I can tell. This story of Moderna and the vaccine is the exact same story that we heard from Gilead 2 weeks ago. So it's just pump, it's just hype, it's hopium basically. But here you go. All right, here's the daily. All right, here's the weekly. So rocket ship higher. These rocket ships higher, these parabolic moves higher, always end bad. I mean, stocks, when they go up, people are running the momentum, and people bail. They're only in the stock based on momentum. As soon as that momentum starts to change, everybody bails, and these things come crashing down. So it's the same thing. I mean, you see it time and time again. All right, so daily. Let's look at the daily here. Yeah, still in an uptrend on the daily. It's about right there. Let's look at the hourly. All right, so there's your trend line. And what I would say is just watch this trend line. You can see it. So we'll probably pull back to the trend line. But they're probably not going to give you an objective area to short this thing. The way it'll most likely work is there's going to be some negative news that comes out that, whether it's the SEC looking at them or whatever I've heard, and then it'll gap below this trend line. So you're most likely not going to get just a sweet spot to just get short this momentum. So if you're long, same thing goes. You're not going to get a perfect area to just get out and take your money. They're probably going to gap it down, and you'll have to give back some if you got in early. So that's why I never chase, especially momentum names, because if you chase, they'll gap it down and you'll just be negative without an opportunity to get out. So that's this one. I just see it, it could obviously go higher. All right, couple more and then I'll wrap up this video. Roku. And again, these I haven't looked at this stock for a while. I don't trade this one normally, and so I'm just running through it and just pointing it out as I see it right now. Okay, so first thing that comes up to me is this trend right here. It's about there. Yeah, there it is. That's perfect. You can see reaction high, reaction candle right here. This is a daily chart too, so this is a big major trend. Reaction here, see the overshoot, and then you failed and closed back below. Reaction there, reaction there, reaction there. So there's your trend, your resistance trend line. And then on the downside, don't have the cleanest trend, so we're going to say it's right there for now. So on the downside, I see maybe something like this. This big spike down was the big shakeout, well, just recently that 5% sell-off maybe. Oh, sorry, I'm looking at a daily here. This was the big crash that we had. So, throw that out and try to normalize, and I guess we'll just look at it right here. You can see that we held as resistance, came back here, gapped right above this, and then moved higher. So I'm going to say that's your major support, 101.55. We're right in the middle of the range, so it's a no touch for me. There's no good clean area to get in on any trade, long or short, on this one yet. So yeah, that's that one. Okay, let's look at some gold stocks. Probably not going to go through them all, but I think it's a good idea to kind of give everyone a update on these. All right, so gold futures just still looks bullish. Gold bullion rolling out. Let's look at the daily here. I always like to look at the larger time frames just to get an idea of whether the major trend is still intact, still bullish, still in an uptrend. You can go to the hourly here. So we did have a breakout and a back test. That's actually what that looks like. Here's your trend line right here at 1736. You can see we held that. And look, we broke out, back test, undercut it a little bit, but now we're starting to move higher. So it does look bullish. We'll have to see if this does kind of look like momentum starting to fade a little bit though on this. So we'll have to watch this. Barrett Gold. All right, so look, we started to have a breakout yesterday, and like I said, they love to do this in gold miners. They love to make it look like it's going to break out and then fade it. So this might be good for a move all the way down to the bottom of this trend line, down to 26. I'm just watching this as of right now, but that might do that. So, oh, and then the resistance is 28. About 28.20. Which is, what we made all the way back here when we peaked. So luckily I got out of this thing at 20, right here about 28.20. And I've been out of it for the most part since. I've jumped in it here and there a little bit, caught a couple trades, but for the most part been out of it and kind of sidestepped a lot of the sideways action. And I'm looking for some sort of a resolution or a pullback down to major, a lot larger support. Okay, running through these. Newmont. So a lot of these are a lot of these have broken this uptrend that they've had. Newmont, I think this was the uptrend and it just broke sideways. So to me, that looks bearish in the near term. Agnico Eagle, same deal. Just started to break the, trend line. There's the trend line roughly. And look, broke it here. Back test, back test, back test right there, broke, starting to weaken. I think that's kind of the theme that I'm seeing in a lot of these gold miners is they're starting to lose their uptrend momentum and starting to break, flag out, either creating a consolidation bull flag or going to start to weaken a little bit. Now, if they just flag out and then start to break higher, that's very bullish because that just shows that the longer term bull market uptrend is completely intact. So I'm completely open to that and I'm watching for it. All right, that's and here's Sabina. This one was a nice clean break. I was able to get out of this thing up around 150 And you can see uptrend. This is a daily chart. Nice clean uptrend. Nice, here's your sell signal. Nice impulsive break on this. So I've got us coming down to 117 roughly. I think that's an area. You can see, resistance in this area. Then it held a support. So I think we probably come down, tag that, then move higher. So looking to be a buyer back on that one around that 117, 118, 120 level, somewhere right in there. So, okay, guys, that's it. That's all I got. The only thing I just want to point out, going back to the Qs and the SPY, is volume. You always want to watch volume. This breakout, look, it's already starting to weaken, as you can see. Look, the Qs, it's starting to weaken. So we'll see what happens today, whether they are able to continue to move it higher. Again, I think if this thing moves higher, like SPY, if it can move up into the 302 or 302-ish range and continue to do so on low volume, to me that signals a good opportunity to take a short. Could be wrong. Again, I've been wrong temporarily in calling the short trade. Again, I didn't say get short down here, all right? So, understand how time has gone. Down here I was bullish, and I said let's start getting short, up in this area, and I used the Q. So I started saying let's get short in this area about halfway up the rally. I started to build a short position, continued to add on to it as we started to go higher, and then I stopped adding to it, and that was it. So I've been wrong since I started to build the short position in this little area. But again, my trading style is, it's a longer term swing trade. I'm not worrying too much about this 10% up move. I'm trying to catch, a leg down like this and potentially a lot more. So a 50% drop for a 10% up move, risk reward, it's not too bad. So whether we get that, it's anybody's game, I guess. So I could be completely wrong. I could just be temporarily wrong, or I could be right, I suppose. So thanks, guys, for watching. Appreciate it. Let me know what you guys think of the analysis. If you see me doing something wrong, or if you have some experience on technical analysis and certain things I'm not picking up, let me know in the comments so that I can start to evaluate those. I'm constantly learning. I've been doing this for a while, so I feel like I've got a relatively good technique, but at the same time, this is a game that you're always learning at. Okay, guys, thank you. Hit that subscribe button, like if you're new. Catch you guys on the next one.